Hi there and welcome to Wednesday's Targets in Focus. Today I have Tony Nyman from Informa Global Markets in London on the line to have a look at the euro dollar, dollar yen and Aussie dollar. On the back of the improvement of German business confidence for September, the euro was a little change near a one-week low. So Tony, how do you see the euro dollar trading by the end of this week? And how did the Fed decision on the 18th have an impact on your forecasts?
Our 1, 3, 6 and 12-month forecasts are 135, 137, 140 and 135. So we're relatively bullish euro dollar. Taking the German IFO yesterday, the market was actually slightly disappointed with that number. Euro's still relatively bid, but it was seen as a disappointment. The IFO rose, but on the three components, it was actually slightly softer than forecast. So what we've seen since is a little minor, very minor correction, just below 135. But at the moment, activity is certainly centering on 135. And really, if we look at euro dollar, say short, medium, and slightly longer term, we can see that, as you mentioned, the main driver at the moment is the Fed. An FOMC and tapering and non-tapering. And actually recently, since last week's Fed, we've raised our forecasts on euro dollar. And if you have been watching any of the wires since, you'll know that many of the big institutions are also raising their euro dollar forecasts to 140 plus, 145 plus. It looks like the broader market had got the Fed outlook wrong, and there was little in September's statement to suggest those who voted against tapering in September could be tempted to go in October and or December, and that's a relative dollar negative. Meanwhile, Uber-Dov Yellen is now even more firmly entrenched as likely eventual Bernanke replacement after perceived hawk Summers dropped out of the race. Further, again, US budget debt ceiling uncertainty could be another repeat real dollar weight over the coming months. So we've revised our dollar forecasts and we are slightly more euro dollar bullish. More independently regarding the euro, we're going to keep a keen eye on EZ data over the coming weeks for any signs of a slowdown in the tentative recovery. And we'll also be watching the ECB and the potential for further accommodation, as well as concerns over relative euro strength in that 135 area.
And Tony, moving over to the yen, which we saw advance today, as US budget talks calls investors running towards the Asian safe haven. So can you tell me your views on this and share with us your forecasts?
Yep, our forecasts on dollar yen are still relatively bullish over the period 1, 3, 6 and 12-month period. They are 99, 100, 102 and further out 110. Yes, investors will run for the safe haven, which very much includes the yen. The FOMC non-taper decision, again, it's the main driver of the market, and it's been a wait here. And in related markets such as the US 10-year yield, which is back around just below 2.7%, having touched the psychological 3% mark just before in the days ahead of the verdict. However, we're looking at the BOJ and the Japanese admins very closely right now, and we noticed that after the Fed decision, Central Bank Chief Kuroda was extremely quick to respond by declaring increasing Japanese inflation expectations is by no means easy, and the BOJ will continue to take appropriate action. We've got to take Kuroda at his word. The 2% inflation target by 2015 for Japan looks a huge reach at this stage, even after May's mega easing and the decision to double monthly JGB purchases by 7 trillion yen plus. Market participants continue to anticipate additional BOJ easing, so shorter term yields fall, and this will make the yen less attractive. So we expect the BOJ, the Japanese government, through stimulus to work towards keeping that yen low in their own policies, and that's why we're slightly dollar yen bullish still.
And finally, Tony, looking at the Australian dollar, which was lower with little to direct traders still waiting for clarity on the outlook for the US Fed monetary policy. Can you tell me more about your views on the Australian dollar?
We are slightly behind the curve regarding the Aussie. We are less than bullish. We, in our 1, 3, 6 and 12 months, are looking at 92, 91, 88 and 88. So we're looking considerably lower, really. Looking at the Aussie in the last few weeks, since really the turn of H2 in July, it's been pretty much the whipping boy across FX majors. And recently, in the last few weeks, it's been in comeback mode, as we call it. And that's been buoyed by the RBA decision to leave interest rates at 2.5% in September, but most importantly, to omit its easing bias line of scope for further easing. And also, Australia Q2 growth was relatively steady at 0.6% quarter-on-quarter and 2.6% year-on-year. The Aussie has also been supported towards 95 by the improving economic data run in China, Australia's key trading partner, as we all know. So obviously the Aussie's been looking a little bit better through the course of the month, but we don't think it's out of the woods yet. In fact, 95, 98 towards parity, we think that's pretty much its short to medium term tops. China is planning to restructure its economy away from credit, investment and export-driven growth towards more consumer demand-led. But many obstacles and uncertainties lie ahead before this can obviously be achieved. This China uncertainty, US budget debt ceiling concerns, which you mentioned, and continued EZ recession, none of this really, we believe, is conducive to risk-on trade in the broader market and sustained Aussie strength. We're relatively bearish Aussie. We think the RBA, very much like their Fed counterparts, is data-dependent. Growth is set to remain below trend in the near term, at least in Australia, and we would not be surprised to see RBA boss Stevens and co. go back to their more dovish bias maybe as soon as October and through the remainder of 2013, now that elections in the country are out of the way.
Tony, it was great talking to you today. Well, viewers, do stay tuned to Dukascopy TV, as we will be keeping you up to date with the very latest Forex and economic news. Have a great day.